Today, we are looking at the U.S. stock futures as of January 13th, 2026, which are pointing to a slightly mixed to flat open. This reflects a cautious sentiment among investors. What are the main factors driving this mood?
The primary drivers are twofold. First, we have the critical December CPI data report along with new home sales due out today. This report is expected to heavily influence Federal Reserve rate expectations. Second, major bank earnings reports for the fourth quarter are kicking off, with releases from JPMorgan Chase and Bank of New York Mellon before the market opens.
So let's unpack the CPI report. How might hotter or cooler than expected inflation data impact equities?
If the inflation data comes in hotter than anticipated, it could heighten concerns about sustained higher interest rates or policy uncertainty, which would likely put pressure on equities. Conversely, cooler inflation data would generally support risk assets, as it might suggest a less aggressive Fed.
And on the earnings front, what are the expectations for these major banks and what are the implications of their performance?
For JPMorgan Chase, the consensus EPS is around $5.01, and for Bank of New York Mellon, it's about $1.97. Strong results from these banks could bolster the financial sector and broader market sentiment. However, any misses or cautious guidance, especially amidst ongoing policy risks, could weigh heavily on bank stocks.
Beyond these immediate economic and corporate events, the report also touches on ongoing concerns about Fed independence and political pressures, including a DOJ probe into Fed Chair Jerome Powell. While the market has reportedly shaken it off in recent sessions, does this truly dismiss the concern, or is it a factor that adds persistent uncertainty?
It certainly adds a layer of uncertainty to the monetary policy outlook. While markets have shown resilience, the probe, viewed by Powell as pressure to cut rates, introduces political risk into what should be an independent institution. Investors may not be reacting with panic, but it's a background factor that analysts are watching closely for its long-term implications on policy stability.
We also see geopolitical and oil supply dynamics mentioned. How do developments like those concerning Venezuelan oil factor into market performance and inflation views?
Developments around Venezuelan oil, such as potential increased U.S. access or threats to supply, can directly impact energy stocks. More broadly, oil crises and related supply news sway inflation views. Any significant shift here could influence the energy sector's performance and alter expectations for overall inflation.
Turning to some of the latest news highlights from the report, what are some of the other notable movements or announcements influencing investor sentiment?
One interesting point is Walmart's upcoming addition to the NASDAQ 100 index later this month, which could drive inflows and positive sentiment for retail and consumer staples. We're also seeing gold and silver futures at or near records in pre-market trading, signaling safe haven demand amidst policy and geopolitical risks. The airline sector is mixed, with Sun Country, for example, up sharply on acquisition news from previous sessions.
Given all these factors, how would you characterize the overall sentiment in the pre-market as described in the report?
The sentiment is neutral to mildly cautious or even bearish in the pre-market. While we've seen recent record highs, there's a definite pause ahead of the CPI data and earnings. Institutional investors are focused on macro data and policy stability. The VIX, around 15 to 16, suggests moderate expected volatility. Not extreme panic, but a watchful stance. There is no major shift towards extreme bullishness or fear.
For investors looking ahead to today's trading, what are some key stocks or sectors to keep an eye on?
JPMorgan Chase is definitely one to watch due to its earnings report, which will be a key gauge for banking health. Delta Airlines, another company reporting earnings, will provide insights into travel demand. The broader financial sector remains sensitive to interest rate cap discussions and CPI implications. Energy stocks like Exxon and Chevron could see volatility from Venezuela oil developments. Lastly, consumer staples and retail, including Walmart, will react to its NASDAQ 100 edition and the CPI data's impact on spending.
It's clear that the market is navigating a complex landscape of economic data, corporate performance, and geopolitical factors as of January 13th, 2026. This dynamic interplay will undoubtedly shape trading activity throughout the day. If you found this discussion insightful, share this episode with a friend.